Hey everyone, in this video, we're diving into the unicorn entry model. The unicorn combines a breaker block with a fair value gap. First, we'll review the model through a PDF explanation, then jump into the charts for some examples. Fair value gaps. Since the model relies on fair value gaps and breaker blocks, let's briefly cover both concepts. A fair value gap is created when there's a price imbalance between 3 consecutive candlesticks, leaving a gap in the market. This gap can act as a point where price may return to fill before continuing its move. A fair value gap is identified using a 3-candlestick pattern. We'll start with the bearish example. The first candlestick's low doesn't overlap with the third candlestick's high, leaving a fair value gap or imbalance. On the bullish side, it's the opposite. The first candlestick's high doesn't overlap with the third candlestick's low, creating a gap here. Now let's move on to breaker blocks. A breaker block forms a structural pattern. When the price moves up, it creates a swing high, then drops to form a swing low. It breaks the previous high, creating a higher high before dropping again to form a lower low. The pattern looks like high, low, higher high, lower low. For the bullish breaker, the price creates a swing low, then a swing high, followed by a lower low that sweeps stops, and finally a higher high. If we were to mark these breaker blocks, we'd focus on the lowest down close candle before the move that creates the higher high. On the bullish side, we'd focus on the last up close candle before the price drops to create the lower low. The unicorn model. So what exactly is the unicorn model? It combines a breaker block with an overlapping fair value gap. Here's an example. We've got a breaker block forming through the structural pattern, and after displacement, a fair value gap is created. This fair value gap is where the entry occurs. Similarly, on the downside, there's a breaker block and a fair value gap, where price moves back into the gap before continuing higher. Let's look at the first example using EURUSD on the 3-minute chart. We've got some smooth lows below that are likely to act as a liquidity draw. Above high, we've got equal highs, and I'd like to see these taken out before the price moves downward. Let's see how this plays out. Price makes a new high, and we've a high low and higher high. Now I'm looking for a lower low with displacement. Here we go. The price forms a lower low. Looking at the breaker formation, we've got a high low, higher high, and lower low. I'm focusing on these down close candles, which swept the high before the move down. With the unicorn model, we also need to check for an overlapping fair value gap. There is one here, as the high of this candle doesn't overlap with the low of the next, creating a gap. I'll look to enter around here, with a stop loss either above the high or above the breaker block and fair value gap. Let's see how this works out. Price taps into the gap and moves lower, taking out the lows. Now we move on to our next example. In the second example, we see price moving upside and forming several lows. I'm looking for a move upward to this high. We have already marked the high and low and watched the price action. Price runs through this high and create new higher high. I'd like to see displacement to the downside and break this low, which happens here, and create a new lower low by shifting the market structure to the downside. So now we have a breaker pattern formation as high, low, higher high, and lower low. So we mark this highest down close candle as a breaker block and check for an overlapping fair value gap. So here you can see a fair value gap is overlapping with the breaker. Now we'll wait for price to return here. My stop will be just above the breaker block and targeting these lows as a draw on liquidity. Now price has retraced to our zone and we will enter as a short position targeting our draw on liquidity. So here you can see how the market manipulates to the downside and hit the target. Trust me guys, this is the most high probability entry model that I used for my trades. So go to your charts and backtest it and refine it. The unicorn model's strength lies in its simplicity and precision. By combining the breaker block and fair value gap, you increase your chances of a successful trade. It's straightforward but highly effective, especially when backtested and refined over time. So let's move on the final example. In the final example, we are with GBP/USD on the 1-minute chart. So we runs through some buy stops here and here. So now we have marked out the swing points. We have a swing high, swing low, and a higher high. Next, I am expecting that price break. This swing low with displacement. And here we go. We got market structure shift towards the downside, and this bearish price indication. So now we have breaker formation pattern, a high, low, higher high, and lower low. So we mark out this highest down close candle as breaker block. Also, we have a fair value gap overlapping with breaker. So we mark out, now we want to price retrace back to this breaker plus FVG, and then we anticipate as a short entry by targeting these sell stops as a drawn liquidity. So here you can see price retrace back to our zone, and now we trade as a short position by targeting these sell stops. And finally here, you can see how the market reached to our final target, offering very high RR. This model is not only easy to use but also provides excellent risk management opportunities. With precise execution, you can capitalize on market manipulations while keeping your risk minimal. The high probability nature of the unicorn model makes it a favorite for traders seeking both simplicity and efficiency. Now that you've seen the power of the unicorn model in action, it's time to hit the charts and test it out yourself. This strategy offers high probability entries with great risk to reward potential, making it a must-have in your trading arsenal. Remember, practice and backtesting are key, so refine this model to fit your style. Thanks for tuning in, and if you found value in this video, don't forget to subscribe for more in-depth trading insights. I'll see you in the next one. Let's keep leveling up our trading game.